So we see healthcare participating. We see biotech in particular get hit today, as it does when we tend to have these risk-off kind of days. How do you view this volatile environment? Do you view it as an opportunity to pick up some stocks that you think are undervalued? Do you step back and stay away on days like this? What's your approach?
Well, we run around with our hair on fire. No, actually, what we do, we are very stock selective. So if there's something that seems to be off for no particular fundamental reason, we would tend to be buying today. In terms of biotech, other than the companies we love dearly, we'd be staying away. We think biotech is at risk for more volatility. Valuations are high. Should interest rates spike, that's not so good for biotech. So we, sector-wide, no. Stock specific, we may be in there buying a few of them.
So let's talk about the couple of deals that are potentially on the table today. So the Wall Street Journal talked about a merger between Humana and Walmart. We're reporting something slightly different, that there might be some kind of partnership or a deal made, not necessarily a full merger. What are your thoughts? You did own Humana, but
Yes.
you don't anymore.
Right, we've owned it and we made a decent return, and we thought, why be greedy? Humana and Walmart have always had a partnership in Medicare Part D. So they've been partners for a really long time. An outright acquisition, to be fair, seems a little odd to us. I mean, I don't know if you go in to pick up chicken and get your blood pressure checked at the same time. It just doesn't make any sense. But we are seeing a trend towards consumerism, and you've seen a lot of deals in the sector, CVS and Aetna, Cigna Express Scripts, where consumers are actually getting more involved in their own particular health care. And while this deal, the way I've heard, it seems unlikely, the trend is in the right direction.
Do you see it as defensive? I mean, even if it's not a deal, if it's a closer partnership, is it defensive given the other deals that we've seen recently?
Oh yeah, absolutely. And beyond all of this is the specter of Amazon. And I mean, healthcare people don't know anything about Amazon, other than the fact that it seems to be a destroyer of industries. And so while it's not really clear what Amazon is going to do in healthcare, and so far they haven't really done very much. All of these things seem to be responses to the specter of Amazon.
But that's the thing. Do you buy that Amazon could potentially do something in healthcare, or is this industry, this octopus of industry, so entrenched that it would be very, very difficult for an Amazon, even an Amazon, to have the kind of scale that would be necessary to disrupt any of these, the managed care, the pharmaceuticals?
Well, if I was Jeff Bezos, I could disrupt it. So it's possible. Whether or not they want to is another story. To your point, excellent point, everything's entrenched and everything's kind of a mess. However, there are so many inefficiencies. It'd be so easy for somebody of scale, and certainly JP Morgan and Berkshire and Amazon have sort of recognized, and it's unclear how that's going to wind up. Unclear, but there's so many ways that you don't even have to have a full disruption. Remember, this is a $3 trillion industry. So you shave a couple of percentage points off of that and you're starting to talk about real money anyway.
But some of that is already happening by companies that aren't Amazon, right? I mean, you look at United Health, for example.
Which we do own.
Does it make sense anywhere within healthcare right now to have a separate pharmacy benefit manager, to have a separate drug distributor? Does that model make sense anymore?
Actually, to be fair, in my opinion, the model never actually made any sense. It was just everybody picking money out of the system. So it would make more sense for there to be more horizontal relationships, but it's going to take a while, and there's going to be a lot of deal activity over time, either deal activity or at least perception of deal activity.
Is this going to decrease end-user healthcare costs eventually? I mean, if you're taking inefficiencies, in theory, if you're taking inefficiencies out of the system, if you're removing middlemen and removing steps, it should, right?
Yes, in a perfect world, yes, but in my career, which unfortunately is a really long time, it has actually never happened. So maybe we can reduce the cost of spend. Remember, we're also fighting against demographics. You've got a baby boomer generation that's about to really get going cost-wise.
Les, there's another deal today which would have been a big enough deal if it hadn't been overshadowed by other things happening, but the GE deal, where it's getting rid of part of its pharmaceutical arm, the Veritas, for $1.05 billion. Does that make sense to you?
Well, it's again, it's part of the same deal trend we've seen, but also there's a GE specific issue, and GE really underinvested in its healthcare unit, which is fantastic. So I think they'll find homes for a lot of their healthcare assets at General Electric. I'm not a General Electric specialist, but we've seen a lot of activity. And
what's so good about this healthcare unit that?
Well, General Electric in general has gotten scale in a lot of businesses, and private equity in particular, and we do some private equity too, love scale businesses. So you're basically buying the #1 market share at almost any time in General Electric. It's just the healthcare unit wasn't a priority for them, and maybe now it will be.